Hello, my name is Megan, and my partners' names are Sarah and Jorge. Together, we make up Seniors Think High. Our main goal is to come up with new, innovative ways to use cannabis to help the elderly community. New Idea handles all of the innovation process, as the business is made up of men and women that come up with new ideas. Canna Suites assists with pain and weight management as we are trying to alleviate opioid usage. Halo Senior Living houses the elderly and provides 24/7 care for those in our community. As partners, we agreed to keep everything as fair and equal as possible. We are all equal partners, splitting the business 33.3% amongst ourselves. The three of us also agreed to take a 10% salary. We wanted our partnership to grow and or lose all the same for the three of us across the board. This is our chart of accounts. We started with our cash account, our accounts revenue, company supplies, the cannabis itself, our Think app that we use through New Idea, and our nursing equipment. We have two contra asset accounts. One of them is going to be our cannabis extractor, and the second one is our medical beds. Our liability accounts are our accounts payable and our wages payable. Our partners' equity accounts are going to be each one of our capital and drawing accounts, as well as our income summary. Our revenue accounts are our sales, the nursing revenue, and the Think app revenue. Some of our expenses are our wage expense, our advertising expense, insurance, rent, and telephone expenses. We also have the depreciation expenses for our cannabis extractor as well as our medical beds. We also did the calculations for depreciation so that you guys can kind of see them, and I will tell you about them as well. So PP stands for the purchase price, SV stands for salvage value, DC stands for depreciable cost. This is the purchase price minus the salvage value. UL stands for useful life, and DC over UL is depreciable life after useful life. So our cannabis extractor was purchased at $20,000. The salvage value for it is $5,000. The depreciable cost is $15,000. Our useful life is broke down over 10 years to 12 months, which means it depreciates at a rate of 120 months. So the DC over UL is 15,000 over the 120 months, which means that it depreciates at a value of $125 per month. For the debits and credits of this, we debit our expense of the cannabis extractor at $125 and credit the I can't remember the word. What's the AD? Assets, contra assets account of the cannabis extractor for $125 a month. We did the same exact process for our medical beds, and what this broke down to was $65,000 over 360 months, which means it depreciates at a value of $180.56 per month. The debits and credits are exactly the same. The only difference between them is that it says medical beds instead of cannabis extractor. Sarah will now present to you guys what happened through our month one of operations. Thank you.
Hi, this is Sarah. So our month one is April. So April 1st, Sarah invested cash in business, $5,000. April 2nd, Megan invested cash in business, $6,000. And April 2nd, Jorge invested cash in business, $8,000. These transactions affected the assets and the owner's equity and the accounting equation. April 4th, purchased THC oil for cash, $550, which affected our assets. April 5th, purchased furniture for New Idea for cash. This also affected our assets. The cash went down, but the assets went up because furniture is an asset. April 8th, purchased nursing equipment on account for $2,500. This affected our assets and our liabilities. April 11th, paid first month rent for New Idea on account, which also affected our liabilities. April 12th, purchased stove for cash, $1,200, which affected our assets. The cash went down and the assets went up. April 14th, deposited revenue from Canna Suites, $900. This affected our assets and our owner's equity. April 14th, paid cash for wages to employees, $600. April 16th, purchased company supplies, $75, purchased with cash. April 19th, paid telephone expense with cash, $50. April 20th, received cash for New Idea Services, $450. April 22nd, paid full amount for both transactions that occurred on the 8th and 11th, $4,000. And this bumped our liabilities down to zero. April 24th, purchased a TV for cash, $450. April 27th, deposited nursing revenue, $2,300. And April 30th, paid insurance expense for the month, $400. These are all of the transactions for April 1st. Our financial statements. So the income statement, Seniors Think High had a net income of $3,650 for April 2022. Balance sheet. At the end of the accounting period for April, the total amount of assets was $22,650, and the total amount of liabilities was $0, and the partner's equity was $22,650. So the statement of partner's equity, the partner's net worth at the beginning of April was $19,000, and the partner's net worth at the end of April was $22,650. So I can say that month one was profitable for us. If you want to see the accounting equation, we ended up with $22,650 equals 0 plus $22,650. And next, Jorge will present the transactions for month two.
Hi, I'm Jorge, and I'll be presenting to you guys the transactions for month two, which is May, all of May. So here are the transactions for month two. As you can see, there were less transactions. We were less profitable, less active during this month. So the first one happened on May 1st. New Idea buys $500 of materials for their app. So decide to try to improve it in ways that they wanted to. And then the next transaction did not happen until the 4th of May, which was that New Idea has an idea and rent out its space for $600. So they had another idea they wanted to evolve in the business. They thought they could improve it better. So they also spent more money on that idea. And then on the 7th, all three partners have decided to put more money in the business. So all three of us decided to put more money in the business, but we all decided to do it equally. So we each invested $3,000 more in the company. So it was a total of $9,000 that was invested in the company. On the 9th, the company made a profit of $4,000. So we didn't make a good amount of money that day, but compared to what we've been sold before and spent, it kind of balances it out. And then on the 11th, we already paid $2,000 to app developers to develop the app. So now we're taking more actions. We're taking more actions to improve the app. We really want to push out more and make it as best as we can with no bugs, no crashes or anything. And then on the 14th, we're here to withdraw $3,000 from the company. So despite the profits and how much we've been putting in the company, I've decided to take out some more money for personal use. On the 20th, the company spent $2,000 on ads on social media. So the company as a whole decided to put more ads on social media because we thought it was the best way to push the company out and promote it. And $2,000 was a pretty decent amount to spend on the ads. And finally, on 25th, Megan withdraws $1,000 from the company. So now Megan decided to take some money of her own out of the business for her own use. These are the T accounts for that month. A lot more shorter, a lot less. And now, so the income statement. We made a total profit of $1,350 for month 2 compared to month 1. So May was not as profitable, didn't make as much. Balance sheet. And then, so our assets total was $5,000. Our liabilities were $3,100 because we had to pay those things that New Idea wanted to do to improve the app. So we did have some liabilities, which brings down our overall profit of how well we've done. And finally, the partner's equity was $1,900. So among all of us, $1,900 isn't bad. It won't serve out evenly, but as you see, it is a lot less profitable than what we did before. So the beginning of this month, partner's equity was 0, and they went up to $1,900. So you see an increase in total profit we made. But like I said, compared to last month, to April, we just weren't as profitable. The most used accounts were the cash account. We involved a lot of cash investments. We need to make more investments, but we didn't have too many liabilities on our hands. So our prediction for this company is that it probably won't do as good. This month gave us more of a reality check of what we need to do better. Even if we do invest more, we need to be wisely with it, but we need to move. We can't keep using cash as frequently as we do. But that's about it.
Thank you all for joining us today. And again, we are Seniors Think High. Bye.
Thank you.